With respect to taxable services, just want to highlight big area, big, humongous area to plan in is with respect to leased employees. If you're paying sales tax on leased employees, first you want to question whether or not they're truly leased. Is the recipient of the leased employees, does the recipient truly have supervision or control over those individuals? If so, then that would normally be a taxable employment service. But you can structure those arrangements as long as to be tax-free if they're contemplated to be for an indefinite period of time. The individual is being provided for an indefinite period of time, and you don't know how long that individual is going to be there. It's not there for seasonal work or for some short-term need. You have no contemplated ending date. Then you can structure the arrangement to qualify for the one-year permanent assignment exception that says that if the individual is provided under a written contract that specifies that the individual is permanently assigned, and the contract has a one-year term, and typically they'll have one-year terms that are renewable for additional one-year terms indefinitely, then that would qualify for the one-year permanent assignment exception as long as the individual was truly intended to be there for an indefinite period of time. So that's some planning to think about to take advantage of that exception.
I believe we have a follow-up question, Ryan.
Yeah, there's a follow-up question here. Let me pull that up. If I purchase TPP outside Ohio, have them sent to a third party in Ohio for repackaging, and then have the TPP shipped via common carrier to stores outside the U.S., does that still qualify for the packaging exemption? The TPP can be stored at the third party from 1 day to a few months.
Okay, I was anticipating a different question. So tangible personal property is being acquired from outside of Ohio, brought into Ohio, and it sounds like is to be used as packaging material?
Yeah, this was asked by Taylor Moore. So let's see if another response comes in.
So if it's packaging material that's being acquired, it retains its exempt status regardless of the fact that it's in Ohio for a short period of time. If the question is, I bought some taxable property, I bring it into Ohio to repackage it and then ship it back outside of Ohio, unfortunately, that would be a taxable use or storage of that property in Ohio. There are cases that have said that if you bring in, normally taxable property and all you do is rearrange it in a cross-docking facility, that constitutes a sufficient exercise of control over that property in Ohio to make it subject to use tax, even though it may only be here for a few minutes in terms of its, kind of sedentary position.
But the other thing I'll note is, if you just purchase a bunch of different products and then you bring them into Ohio and put them in the same box and package them up, it's questionable if you're considered a retailer or a manufacturer if you're not selling to the end consumer. So you might not even have the requisite status to claim that exemption.
Yeah, it says to follow up, it says no fixtures for the stores, lamps and tables. So that was the follow-up.
Okay, so it sounds like it's property that's taxable outside of Ohio, that's being acquired, lamps and fixtures being brought into Ohio, packaged up and sent outside of Ohio, and that would be, unfortunately, that would be taxable if that's your property for your own use. It wasn't, assuming it's not property to be sold. Because if it's your inventory, it's still under the resale exemption. All right, last item, just to whet your appetite on, is construction contracts. Now this topic we could spend a whole day on. Construction, how to handle construction contracts, and the baseline set of rules is that if something is a construction contract, which means it's an item that involves real property, where a contractor buys materials and incorporates them into real property, then the contractor is deemed to be the consumer and pays the tax on those materials, which is a good result because it's a lower tax base, as opposed to if it's personal property, then that party that buys the materials and constructs something and conveys it to you if that's personal property that's conveyed to you, then that party that did all the work has to collect tax on the whole price. If it's real property, the contractor just pays tax on the materials and then presumably passes that on as part of the cost or the price to the customer. So the big issue here is, well, is it real property? What constitutes real property? And there's lots of litigation in this area. We were involved in many of the key cases, the most important of which is the Fun Time case we were involved in. It went to the Supreme Court involving Geauga Lake. And in that case, the Supreme Court said if it's really peculiar to the business, and it's not something that can be utilized by another business, unrelated business, in a different line of business, then it's personal property. And so, as a business fixture, is highlighted in this slide. So, oftentimes it's not clear. And what can a contractor do? A contractor can work with the ultimate owner of the property, and have that owner, before the contract is executed, advise which portions of the contract are real property, which portions are personal property, and as long as that contractor relies on that in good faith, then the contractor is protected from any erroneous classification. As long as he relies on the representations of the owner of the property, ultimate owner, and acts consistent with that, then the contractor is protected. So that was essentially. Are there any other questions? What your focus should be is, at this time, is really thinking about what exposure you have in prior periods, thinking about these exemptions, many other exemptions that we didn't have time to talk about, and then also what might you do in the future to minimize your liability for sales or use tax going forward. And we have a lot of helpful guidance on our blog. Please visit it, and if there's a very extensive outline that we keep updating that discusses many of the exemptions and the cases that have come out since for the last 5 to 10 years.
And then we encourage you to go back and check the blog here in the next week or so. As soon as we get word of what the final language in the budget bill is going to be, or once it's enacted, we're going to go ahead and post something to let everybody know what was in the final bill. And just so you know, our sources at the department and the Ohio Legislative Commission make it sound like there's going to be some sort of use tax amnesty program included in there, but they're still tinkering with what the exact parameters are going to be. But that is certainly going to be a very favorable position for businesses in Ohio.
And we just had a question roll in, Rich and Steve. For dentists, okay, are the filling material, braces, etc., taxable for dentists?
Yeah, that's a good question. There is a medical property exemption, and off the top of my head, I don't have the provision in front of me, but it references prosthetic devices, but it accepts. It does not exempt dental prosthesis, it says, and I'm not sure whether that would qualify or not. I believe that clearly, if it's dentures and something like that, that would not qualify for exemption. But braces, I'm not sure. I'm not sure if that qualifies as a prosthesis or not.
I think that's the final question. If anybody has any further questions, you know how to reach Steve and Rich through their blog. Any final words, guys?
No, just thanks everybody for attending, and
yeah, and we welcome any questions you have. We'd love to, we don't have to worry about us wanting to charge you for anything, and if it rolls forward into an engagement, we would obviously welcome that. But if you have any kind of baseline questions for us, please feel free to contact us. And thank you for the opportunity, and thank you for being part of the audience.